David Darst here to give you a recap of the month of December as we close out 2025, a momentous year. Now, during the month, we had the three major influences on financial markets. Basically, their power and their positive force somewhat diminished, starting off with the artificial intelligence narrative, which has been such a powerful force not only this year but last year. You've had some questions regarding the financing, the circular financing, also the debt financing of many of the entrants and the participants in the artificial intelligence space. Secondly, is interest rate cuts. When the Fed cut interest rates in the month of December by 25 basis points, now it's 175 basis points since they began cutting back in September of 2024. Basically, Chair Powell said you cannot really bank on or expect an interest rate cut of 25 basis points at the January meeting, at the end of the January Federal Open Market Committee. So that also is somewhat diminished. As of now, the Fed funds futures markets are assessing the odds of a 25 basis point cut at only 20%, 80% odds of no change. And the current rate, as you know, is 350 to 375. That's the policy interest rate. Now, the next meeting after that is March 17th to March 18th. There, it's 47% chance of no change and 53% chance of at least a 25 basis point cut. So that, too, the interest rate narrative has somewhat diminished. And then thirdly, the 10-year Treasury. As we began this month, it was 4.01%. It has risen, as you know, and there the diminishment or the reduction in the positive power of the 10-year being lower has come about not so much because of financing, not so much because of inflation or the economy, but more worries over who might be appointed as the next Fed chair. You've had Kevin Hassett, you've had Kevin Warsh, you've had Christopher Waller. So these are the three leading candidates. There are several more, with one or two having been removed from consideration. So that is ongoing. But right now, markets began to think that the new Fed chair would be too compliant with the wishes of the White House and actually run the interest rate policy too easy, too dovish, and therefore bond markets said, no, we don't like that. That's going to be more inflation. So this is what transpired, the diminishment of the interest rate cuts, the artificial intelligence narrative, and, of course, the 10-year Treasury as positive. They're still positive, don't get me wrong. However, they're not as powerful as they were as we began the month. In the month, the S&P 500 was up about 0.4%. It's up between 16 and 17% on a price basis, a little bit more, 18% plus when you include the dividend. NASDAQ was up 0.3% for the month. It's up 20.7%. Again, it's aided by powerful performances in companies like Google, like NVIDIA, which are, of course, in NASDAQ. Google is Alphabet now, as you know. The Russell 2000 was up. It's continuing that broadening that's going on. It was up 2.3%. So far, it's the leader for the month of December. That's a good thing. It means the small and mid cap. It means there's broadening in the sectors away from just the technology and the communication services. It's going out into financials. It's going out into healthcare. It's going out into materials, which have been doing so well. Europe's up 16% for the year. The euro is up another 13% for the year. Japan up 24%, and that the yen is essentially now unchanged against the U.S. dollar. And China is up 16% for the year, with the Chinese currency, the renminbi, up another 4% against the U.S. dollar. In the interest rate sector, the 2-year Treasury, was up 1 basis point for the month. It's running at about 348, 350, and is a precursor. It is a lead indicator of the Fed thinking. With the 350, 375, it's in line with the policy interest rates, monetary policy. The 10-year was up 14 basis points, again, mainly because of the bond market sending a signal. Don't get too easy with monetary policy, or we will basically be raising interest rates on you. And the gold price, with interest rates at the short end going down, the gold price was up 1.9%. It is in record territory, up over 66% for the year. And the gold miners, of course, more than double that. Silver more than double that. The gold miners somewhere up around 155% for the year. The silver price up 143% for the year. West Texas Intermediate oil so far down about 1% for the month of December. As we enter 2026, we want to basically bring your attention to private credit. Private credit compared to business development companies. Business development companies have been in the news. They're selling at below net asset value. The exchange traded fund, BIZD, BIZD is the symbol. It's down about 5% year to date. The reasons are that basically you have higher volatility. You've had the dividends can be cut on that, and you have equity holders are bearing the mark-to-market pain, whereas in the private credit space, you have less subject to forced selling. Now, as you look at sponsors, as we counsel people to look at sponsors, you want them to have the ability to achieve true credit superiority in the capital stack. You want them to have conservative loan-to-value levels where they do lend money in the private credit space. You want very low reliance on what they call payment in kind. That's where when they don't have enough money to pay the coupon, they'll pay in additional evidences of the debt. They call it amend to extend. You want them to see that they've had a good track record in the past when there was frothy and excessively valued conditions, that they basically were keeping their powder dry during the peak evaluation. So they've got a certain sense of market appropriateness. You want to see that they've got demonstrated track record of workouts. And will they take control of the situation when needed? Do they have third-party valuation rigor when needed? And the key here would be the words discipline, discipline, discipline. Just like in real estate, it's location, location, location. In the private credit sponsor evaluation space, it's discipline, discipline, discipline. Thank you very much for being with us. We wish you a great start to 2026 and look forward to catching up with you soon.